everyone, I'm Terry Keenan and welcome to Cashin In. What is the best way to make money in this stock market? Let's get the stock smarts. Our Cashin In crew this week decked out in the stars and stripes. From Los Angeles, Wayne Rogers, founder of investment strategy firm Wayne Rogers & Company in Chicago. Jonathan Hoenig, portfolio manager at Capitalist Pig Asset Management. Well, the market is on its way, believe it or not, to a third down year in a row. But there is strength out there. Consumer stocks like food and clothing, energy stocks, and some big ticket stuff such as the auto stocks and home appliance makers are some of the groups that have been winners. There's certainly a lot more losers than winners out there. Topping that list, technology, healthcare, including those big drug stocks everyone used to love, and services such as cable and telecom. So would you be better off picking through the losers, looking for bargains, or paying up for the stocks that are winning in this down year? Wayne, what do you think?
Well, I'm a believer in staying with what's good, and so I like those staples. I like those kind of stocks. I don't think you can pick a bottom. I said, you might as well go to Las Vegas and shoot dice. I don't know about picking bottoms. I'm not that good.
People have been trying to pick this bottom for 3 years now. You've been buying strength, but even a lot of the strong stocks that you've liked, such as the golds, even the REIT stocks, have been pulling back here. So what do you do?
Terry, I think you got to avoid the stock. I mean, the fact is, the entire stock market has turned weak in the last couple of days, and I'll say it, I am deathly scared of this market right now. I mean, as a rule, you want to buy strength and not weakness, and at this point, the strongest thing on the board isn't even stocks, it's bonds.
Quickly, Jonathan, what scares you so much right now?
I think it's the lack of fear out there. People haven't been opening their statements. People have been avoiding the reality here.
You need to stay diversified. And that means owning beaten down stocks and owning some of the more stable stocks.
But what we've learned is not to diversify because this market's taking out every stock, every group, right, Jonathan?
You know, Terry, all things being equal, weak stocks tend to stay weak.
That's not, Terry, you made the statement that they've taken down all groups. That's not entirely true. The bank stocks, as I've just said, have been fairly stalwart. They have held up to a great extent. And a lot of the financial stocks and some of the real estate stocks, the REITs and the trusts have been very good.
And Jonathan, why is it such heresy to say, like you did, that maybe you should just not be in the stock market altogether? Okay, we're going to take a quick break. But when we return, accountability here, Cashin In style. We will look back at some of the past picks and see how they're holding up. Ding, ding. Back for a look at past stock picks and how they've done. Our Hilary, Kramer, along with Wayne and Jonathan. Okay, guys, last January when stocks started being hit with this Enronitis and investors were looking for companies with businesses that they could understand, you three picked 3 simple stars in the year. Buy, sell, or hold right now, Wayne. Final word, you guys. Jonathan, send a couple of those gold coins our way.
Will do, Terry.
Coming up next, are your mutual funds losers this year? Well, we have found 2 that are up big. Which one will keep on winning? That's our face-off. But first, this quiz. Smokers in New York City, and there are plenty of them, just got hit with a new cigarette tax, pushing the total cost of a pack up to about $7. So how much would that $7 pack cost you if you paid absolutely no taxes at all? $5.55, $4.73, about $3.60, or $2.75? The answer when we come back. Well, chances are that the mutual funds you own are down this year, but there are some that are bucking the trend. So which fund is the one to buy right now? Time to face off. Wayne and Jonathan are back along with Dagen. Up first, Rick wants to know what's up, or maybe what's down, with Johnson & Johnson. It's been trading near its lows for the year. Wayne, this has been a terrific stock. My family owns a little bit of it. Do you like it?
I think it's a terrific company. I own some of it myself.
Corey in North Carolina is eyeing WorldCom. It's now trading for pennies. And he asks if the distressed company is worth a nibble. And Jonathan, some traders have made some money with timely bets. And you know what kind of confounds me here, Jonathan? Everyone's trying to take a flyer on these stocks, and no one even talks about the bonds. Maybe they're a little bit safer if you're going to gamble. She wants to know whether the recent hiring of a new CEO will help. And Dagen, the CEO, Joe Nacio's out, but this company still is really on the brink here.
It has a lot of problems.
What do you think here about Quest? Because it's not a penny stock, but it could be headed in that direction, Jonathan.
Terry, it's darn close. And I mean, to be honest, I look at Kim with 15% of her 401k in one company's stock, and as Dagen pointed out, it's also the company she works at. I mean, didn't we learn anything from Enron? Don't put all your eggs in one basket.
Word of agreement. See you guys next week, and have a great weekend. And for those of you at home who haven't heard your money mail question, keep on watching. We, of course, will do our best to get to it. If you have some new questions, email them to us at cash@foxnews.com. Include your name and hometown. That's going to do it for Cashin In. Have a great weekend. The news is next.